What's up, YouTube? Joe Catchpolia sitting on the couch making some money investing in real estate online, as usual. Fractional real estate. Today I'm looking at Lofty's newest property launch. It's a short-term rental in what is it, Delray Beach, Florida. It's a submarket, in the greater Miami metropolitan area. I'm going to try to keep this video a little bit shorter than my more recent due diligence videos, and I'm just going to try to hit the highlights, but also tell you a little bit about some of the other things that I looked at, but I'm not going to go through. Obviously looked at the census data, looked at population trends. I was happy to see, they're growing both the submarket and the greater metropolitan area are both growing pretty well. Miami's a really big market, over 6 million people. Yeah, I like those. If you've watched any of my other videos, I prefer some of the bigger markets. I think, they tend to uh, they tend to act a little bit more stably over time, and maybe a little bit more predictably would be a better word. But I thought that was good. I looked up the flood maps on the FEMA site. That looked fine to me. These are all things that you want to do with your due diligence, right? But just because I look at a property and I think whether or not I buy it, obviously, should not impact what you do, right? I'm just trying to show you the things that I'm looking at and the things I'm thinking about, give you my opinions on them, but you definitely want to do your own due diligence, both on the property and the site itself, right? If you're not already invested on Lofty, you want to really look into the site, understand it. You should check out a video. I've got a video that's 7 things investors should know before investing on Lofty. It explains a lot of the sort of weird stuff that they do on here. Before I forget, please like and subscribe. And also, in the description of this video, I have links to all the places where I'm currently investing in fractional real estate. Some of those links will give you free money. You want to do your own due diligence on those, read their terms and conditions, see what you actually have to do to qualify for that. But some of those do that. And there's a link to a Discord where several of us discuss investing in, on Lofty, on Mogul, on Ground Floor, Collab, all those different sites. And so you are invited to join that. And at the moment there's around 30 of us, and it's every day there's a good discussion on something that's going on at least one of the platforms. So anyway, back to this property. Um, it's got a nice pool. It's set up well. It's been operating as a short-term rental. So there's a bio for the guy who's running it. He has a ton of real estate experience. It looks like in real estate sales. Has also been investing since 2005, so started the same year I did. I thought that was kind of interesting. Interesting to me, probably not as much to you. But it looked like the guy knows what he's doing, so that's always promising. As I dig into this a little more, though, I want to show you a couple of things that I was concerned about. So first of all, I think it looked good. They have 2 sets of washers and dryers. They actually talked about that in the Discord. Somebody asked them, what's that all about? They were trying to, when they were doing the turnovers, they were trying to wash all the linens in the units when they were doing when the cleaners were coming in. We actually went through that evolution with the management company I was working with here in San Antonio for short-term rentals, where they were trying to do the same thing. And we came to the same conclusion that this co-owner did, is that it's just better to use a laundry service. You get higher quality cleans, and it's more predictable, and your cleaners aren't sort of distracted by going back and forth to the laundry machines. But he still has them in the unit, just so guests could use them and whatnot. And if they had to use them for something, they could as well, as far as the cleaners go. um, so he has a lot of good reviews. That's something I spent a little time looking at. This is super tough to maintain a 4.99 out of 5-star reviews out of 146. So that's typically an indication that this is somebody who knows what they're doing. Let's see. And so because it has been operating, I want to dig into I want to go into the inspection report, right? So this is one of the things I was really surprised at after seeing he's got so many good reviews and seeing that he's somebody with experience and whatnot. When I was looking at the inspection report, there were a lot more issues than I expected. And I want to explain a little bit of a nuance as far as how I'm looking at this. So, for example, when we looked at that property in Hawaii, yesterday or the day before. Uh, and there was a lot of things in that inspection report, and I didn't think that they were a very big deal, right? They were all things that were minor, you could take care of. Um, and it's a property that they were acquiring, right? It wasn't the current co-owner running it, that's going to continue to run it. So I look at that report with a little bit, give them more leeway than I would on a report like this, where this is the co-owner who's going to be managing, who's going to be responsible for managing this property for us if we invest in this property. And so he's been running it like this for the last year. And so with that in mind and understanding, how well it looks like it's been running, I was surprised at a lot of the issues that came up, right? Because this is not when he bought it. This is a recent inspection. One, this is not a roof covering type that I'm very familiar with on residential properties. I've seen it before, but it's not something you run into all the time. It is, I don't even know exactly what they call this, but I have seen it, where it's not shingles, it's a flat roof, but it is, I don't know if it's some sort of membrane or what exactly it is. I'm sure if I slowed down and read this, I would know, but you could do that. But they did indicate, RR, repair or replace both the roof coverings, the roof drainage system, um, skylights, chimney, like, so clearly there's some issues with the roof. Now, that stuff, okay, it's something I want to keep in mind, and we're probably going to have some CapEx coming up, but that's not what I was talking about as far as like he's operating the property and these issues are coming up. These are some other stuff. So like things like downspouts, missing parts, like this is something that if I'm when we have properties here in town, there's someone that walks through these properties relatively regularly and looks for stuff like this, right? Things that are going to. So why is this a problem? Well, you can see like water ends up pooling right here against the house in a way that it's not supposed to. Um, that's a very minor one, but let me get you to a couple others. There's a lot of ripped or bent screens, damaged windows that have the, I can't think of the name of it, but the mechanism that helps them go up and down, that are damaged. And that's something that we run into problems a lot with guests. They want to open a window and they can't open it. That leads to a complaint. So the fact that they have several of those surprised me because they do have such good reviews. And I think probably they're providing such a good overall experience that some of these like maintenance issues maybe don't bother the guest as much. I don't know. I was somewhat surprised by that. But you can see, there's a lot of there's several spots where there's water damage, because of a leak. So this is one spot, right? And so this stuff happening and getting this bad while we're operating a property, this bothers me a little bit. If this were a property that I owned, uh, it wouldn't get to this point. And if it was if I had a third party manager managing it and it did get to this point before they pointed it out to me, that would be problematic for me. We do, on a lot of our properties, we do these pros reports, which is somebody comes through and basically checks everything, takes hundreds of pictures. They do this twice a year. But in addition to that, especially on short-term rentals, you have people that can come in and out of here all the time on the turns. And so, if you're starting to have some sort of water damage, I want though that's one of the things that I always want to address as soon as possible. And so that for me is a little bit of a red flag. It's obviously you're never going to catch everything. If it were the one spot, and that was the only indication, I wouldn't be too worried about it. Damaged fence, okay. Broken latch, like that. That sort of stuff. You're always just going to have problems with properties, and it's a constant fight against entropy, right? Your property's deteriorating, and you're just trying to keep it going. But certain things, yeah, the broken balance rod. This is what I was talking about. There's several notes of this. I really want to have nice operating windows on properties that are short-term rentals, because if I have guests that do want to open the windows, I don't want that to become a problem. There's several notes about not having either grounded or not having GFCIs. This is a problem for me. Like we get these all the time in inspections when we buy a property, and we always address this. If I'm going to put guests in a home, I'm going to have the electrical completely up to code as far as safety goes. And So I don't like to see this because this obviously, I would expect this came up when they bought the home in the inspection, and these are not expensive to replace. So that's surprising to me that that's not done. Um, let's see. There's a couple other things. There's the four, the two sets of washers and dryers. And obviously, you want to go through this slowly and read the comments from the professional. They have um, plumbing in, I don't know if this is the spot or, yeah, this isn't even talking about it, but there's plumbing in one of the closets that doesn't need to be there anymore. Normally, you'd want to remove that because it can leak, and if not, nobody's checking on it. But this is another, active leak at the dining room and the guest bedroom that needs further review. So two different spots. Um, because there are, if it were just one thing, I wouldn't be so worried. But where there's a lot of these little issues in a property that's currently operating, it worries me a little bit about how this is, how well it's being maintained. Again, the window issues, like we just fixed these on ours. Like I don't, you know, and it's not usually a big deal now. And obviously, they break, right? And so if you inspected any property at any point in time that I've owned one, yeah, you're going to find things that are wrong that I didn't know about yet. But you definitely, I mean, this is a bigger list than I expected when I looked at the home, when I looked at the price point. This is funny, it's a light fixture that's non-functioning, but they're like, well, maybe try putting a light bulb in it first and see if that works. But that's something, if you have a good relationship with your cleaners, they should be letting you know, hey, we have a light out in this room, and that's the sort of thing that I think the better short-term rental operators are really on top of. And again, that could have just went out the day before this inspection. If it were the only thing, I wouldn't even comment on it. Um, a leak in the shower, like all these things, right? Like none of them are really big. The roof is one that could become an expensive issue. Even the electrical issues are all, didn't seem like huge issues to me. Like they're not things that are so expensive to fix. It's just things that I would want to have fixed before I put guests in a property. And so let's see if there's any other things. Um, those were the main ones, though. I mean, oh yeah, obviously, this is like this had to. I don't know. I mean, again, like this is the sort of thing that drives me crazy. Like, this should not be this loose, and it's not a huge, not a huge problem to fix it. Probably get your handyman out there to take care of it, and get charged 2 hours at the most. I mean, I don't know. So all that little stuff bugs me. This is the one I think that it was said. It's the in the bathroom and it's not grounded. Like that's to me that's pretty problematic. I mean, it looks like it's a GFCI. So that's actually a little bit of an odd comment. I mean, well, I guess, yeah, why would they do that? And if it's really not grounded. So I don't know. I mean, that's something you definitely want to look into that and see what's going on. Um, but I am nitpicking a little bit because one, it's been in operation, and I read through the guy's description, and I thought, oh, this guy's going to be really on top of it, and so I was a little disappointed to see none of these things are things that issue by itself would ever stop me from buying a home, but having a number of them makes me question if the person who's currently operating it, if that's who I want to have continue to operate it. And it is, there's just I know he's successfully operating multiples of these, so that's if this were the only thing, the sort of a number of little maintenance issues. And don't get me wrong, I mean most of these are just little issues, but the fact that you've got a number of them, bothers me a little bit. But you're never gonna have a perfect home, especially with older homes. So I don't want to be too harsh about it, but uh, it's a little concerning, and I just wanted to make that distinction between if this was the report that I got on a property that we were going to buy, it was like it like the Hawaii one where they're actually the co-owner is just purchasing it at that point in time. None of these things would worry me at all. I mean, maybe the roof, but I mean, they'd all be things like the pricing we'd want to keep in mind of what that's going to cost us for capex and for repairs and maintenance. But that's it. But where this is an operating property, I just really want to think about, okay, is this how I want to continue to have it operating? with guests in it. And that's my only thought on that. One thing that I thought was really strange, I could not get. It looks like 2015 is the last time there was an image capture from Google Street View. At that point in time, this did not look the way it looks now, right? I mean, it looks quite a bit different. At least it didn't look the way that it looks in the pictures now. Is that? Yeah, I think this is it. I don't think it's. Yeah, I think it's this one. Let's go back to the pictures. Do we not have a good front picture? A lot of times you don't. Let's look at. Oh, it doesn't even have a good front picture there. So maybe it doesn't look great on the outside. I thought that there was one somewhere. I'm sure there is, and I'm just not finding it right now. But anyway, I thought that was kind of weird. Usually you can find ones much better. I did pull up a spot crime map. It was one of the cleanest spot crime maps I've ever pulled up. It made me wonder if it was having some sort of issue, like where it just wasn't rendering the rendering the points that where it shows the crimes. Because I mean, it was hardly anything on it at all. It's possible that it's just a really nice, low crime area. I don't know if it's, that's something obviously you want to always dig into, but I didn't have a lot of comments on that other than it was really clean. Okay, let's jump into the numbers though. As far as there's two things that are concerning to me as far as how these numbers are presented. Both of which you've probably heard from me before, but I want to dig into them in a little bit more detail before on other properties. Okay, so we've got underlying asset price 1.431 million. They provide the appraisal. Let's see, there's the order form. Yeah, this might be the picture I was thinking of, and that is the same one. It's a recent appraisal. I think they don't put the appraised value 1.363. And so this co-owner is taking full advantage of the 5% that Lofty allows them to add to the appraised value when they're bringing it to the platform. So we're already paying a 5% premium. In addition to that, this cost here is, you're paying for the furniture in some of the, where is the list? Oh, maybe I got rid of it. But in some of the properties, they didn't actually include the cost of the furniture in them. Some of them, more and more of them, they're doing that, right? Because they're wanting to get compensated for all that. I have mixed feelings about it. When I've bought, properties that are operating Airbnbs, we're very rarely paying the full value for all the furniture, fixtures and equipment. But it depends on what the market's like and what your bargaining position is like, right? And so, I think it's not the end of the world to pay face value for that stuff. But I've been involved in deals where I've helped some clients buy some that were operating fully furnished, and we really gave them, 5 or 10K for, for all the stuff in the home, where, it probably cost them $50,000 initially to set it up. So yeah, I don't love paying the premium right off the bat, but what really scared me, and that's the current appraisal. What really scared me was a couple of things. So this property was bought for $805,000 in 2023. So you had, we're much higher than we were there, right? They added the pool, right? When I looked at the pictures, there was no pool in the backyard at the time they bought it. So that's going to create some value. But beyond that, the home doesn't look that different than it did when they bought it. It's not like it's some beautiful, like very noticeable renovation. There's no more square footage. This says I think 1866, and right, this listing says 1872. I think we said, yeah. So I mean, it's not like they added any square footage. So there's a big jump in the value. And then when you look at what does Zillow think this is worth today, they say less than $1 million. So we're like $400,000 off of what we're paying in value for this, for just the home, right? Just the underlying asset. So Zillow's way off from there. Redfin, even worse, right? And they give a range, and the range doesn't even come close to encompassing it. Now, one thing that I think is happening is they're pulling the info from the old listing, so I think they're not giving it credit for having the pool, but I can't imagine that that's adding $400,000 in value in that market, or we have a good flipping business plan to just go add a $100,000 pool, and maybe pools cost way more there than they cost here. But I mean, this pool, I'd expect to pay 80 to 100,000 to add it to a property here in town. I'm in San Antonio, so obviously our pricing is going to be different, but I can't imagine that's creating that huge difference in value. And then realtor, 959, right? So uh, Redfin, Realtor, Zillow all think, less than $1 million. And so that is concerning to me, right? That we are, that we're so high. And, yes, they do give us an appraisal. Um, but, that's all, but we're 5% over that appraised value as well, right? So that for me, um, I have a really hard time paying this par value for this one, based on looking at it from an equity perspective. And so let's look at it from the yield, right? Okay, so we've got this huge rental yield, right? 25.91%. They're showing annual gross rents for this of 377,000. This is based on a fantastic February number. I think they did like 32,000 in revenue or something like that. Do I still have that up? No, I don't. In February, but if you look at their own projections and their own actuals for the full year last year, they had $180,000 in income. Their projection for the full year of this year is 195,000. And so that's, I think, where this projected annual return is coming from, right? It's this rental yield is based on that 195,000. This rental yield is just based on the annualizing the February numbers. I really wish Lofty would stop doing that with short-term rentals. It doesn't make a lot of sense. You end up having this crazily fluctuating yield, and especially when you're bringing the property to market, for the first time somebody looks at this, a lot of investors are thinking they're buying a property that's a 25% yield, and they're not. That if you annualize last month's, that's the way it is. But that's not how anybody thinks of an investment. I'm sure you've heard me complain about this before. But so if you are, believing their own projections, the 195, this is the one that I want to kind of compare to, some due diligence that we can do online. I pulled up their AirDNA. This is, I found their actual property on here. For the trailing 12, it says 159.6 was the total revenue. And so let's see, what did that look like? So, I'm not really sure where the disconnect is here. Actually, I think it might be that they're not including the taxes in that number. I think they typically show the rental income and the cleaning fees, but I don't think AirDNA is showing you those taxes. I'm not positive, and I think that doesn't work out exactly right either, because this does always just do your trailing 12. But it's at least this number is close enough to their projections that I'm happy. Oh, when that happens, I'm happy trusting their projections, right? Like, I'm willing to say, okay, they said 180. They're saying these are their actuals. AirDNA is at 159. It's a pretty big gap, but it's not. It's not so much that I think that this is just like fabricated. I think there's very possible that we're just missing something there. But so okay, So they're saying, okay, next year we're going to do 15,000 more than our actuals. I never like to buy based on projections when we have actuals in place, right? And so this rental yield is not based on what they did last year. So if you owned this last year, you weren't getting a 10.26% rental yield. You were getting, something lower than that, right? Because it's less than 10% lower. Well, and let's see. Yeah, and then their gross profit. Let's see what their net. So they're saying they're making about $8,000. So about 10% less last year than next year. I'd love to know why, what they think is going to happen different. Now, obviously, they did have a fantastic February. Is February usually a big month for them? I don't really know. So maybe these projections are conservative and they do expect to do better. But we're going to do math on a few things. You remember, I always like to look at the revenue to price ratio. So let's see. Um, what's our price? We're going to just use, let's see, 1.43. Yeah, we'll just do 1.43 million, try to make it a little bit easy. Okay. 143. So that price divided by, okay, so let's compare it to last year's number, right? 180,000. 1 over X because I did the wrong one first. Okay. 12.5. This for me is a very low number. I want to be in the high teens and really ideally like to be in the 20s. When I'm using, when I'm looking at in place in place income, right? So this already is a little bit low for me. If we believe their projection, right, 195. Their projection, even with their projections, you're still low. Obviously, if this number were accurate, then I'd be perfectly happy with it, right? Like, I mean, this number works great. Let's look at that just for fun, because math is fun, right? It is to me. Sorry. Divided by 1. Yeah, you'd be at 26%, and like that might seem crazy, but somewhat regularly we find deals for clients here in town where we're very close to just 20%, right, on these. Sometimes 17, 18, 19, but this is not unheard of to find something that is above 20%. Now 26, yeah, that's pretty tough, but they're not even representing that this is the number they're hitting, right? Like when you take their projection, they're below the 15%, and I think for me, that's a number that's super low, and I'm not very comfortable with it. Now, a couple of things. This is one where there's debt on the property, but the co-owner pays the debt, so we're getting a levered return on this, right? Um, I'm not a fan of that structure. In some cases, it works well for us. This is one where I don't mind it so much because if you look at the debt on the property, it's only 635,000. So it's not, let's say, as a percent of what we're actually paying for the property, 1.4, we're this is less than 50% levered. If you look at it at like $1 million valuation, it's what do we have? It's 63.5% levered. So like it's relatively low leverage. They do have let's see, they've got the mortgage statement in there. It's less than $5,000 a month. Even with with the actuals from last year, this property covers its mortgage, and so you don't have all the concerns that I was talking about with the more highly levered deals, um, where if something happened and the co-owner couldn't make this payment, this property can actually, should it looks like from everything that we're looking at, this should actually be able to support itself and pay some return. It's certainly not going to be a 25% return. It's probably not going to be a 10% cash on cash return either. That's something that you could take a look at if you wanted to dig into it. I'm not so concerned about doing that. It's definitely going to be lower than that, but I'm not so concerned about doing that. I'm more concerned with I don't want to lose money, and so I want to make sure that the property, if there's a scenario where either the lender says, "Hey, no, I don't like this setup. This is a sale of the property, and we're going to accelerate the mortgage, and we have to get a new mortgage." You could do that, and you can see actually too, this is with a high interest rate, right? So like we could go and replace this loan with a DSCR loan, have a similar rate and payment, and I think you'd be perfectly fine. I would close that one now because my computer does not like having so many windows open. Too. And even, that's one last thing. This is just showing, where their management fee and setup fee is. I think this is perfectly reasonable for a short-term rental. Um, so, if you're thinking about buying this and you think that this 25% is your yield, I mean, right off the bat, I would say this is just not going to work, right? This is just based on annualizing February. It doesn't appear to be at all what the co-owner thinks he's bringing into the property, right? This is his projected yield. Um, I think honestly, this is a good indication that I talked about. He does seem experienced. Um, you know, the fact that his projections seem so reasonable, and that this is the projected rental yield, I think it makes it adds adds some credibility to what he's doing. Sometimes when you have these just really outlandish projections on some of the short term rentals, that they're just they're not based. Um, you know, they're either based on just a certain month or whatever it is. I think that really hurts the credibility of some of those operators. But that's not what's going on here. So if you're happy with the 10.26 as your yield, I could see buying into this. If again, I mean, the problem is you're paying a premium to the real world asset price, right? And so if there's a scenario where this property gets sold sometime in the reason, in the relatively near future, you're going to lose money on it, right? Um, for me, this is a somewhat close one for me, except if it weren't for the fact that there are so many opportunities to buy discounted tokens, you know, I would probably do a little bit more math on this and try to compare it to like the Mogul um, short-term rentals that I'm buying here. Now, why, for example, if you've seen those, and if you're not familiar with Mogul, I do have a link in the description to their site. I've bought several pieces of short-term rentals from them. Um, their cash on cash yields are right around 10%, but that is with the debt handled inside of the entity. And so the reason that's important to think about that distinction is the way that Lofty handles the debt, where the co-owner pays it, you end up getting diluted as an investor in that deal, where you're getting levered. You're getting levered appreciation on Mogul. You're not. You're getting your levered appreciation gets diluted on Lofty, and so I need a higher yield on Lofty to get the same economic return at the end of the day that I would get on Mogul. Now, Mogul, they are typically charging, a 5% fee, and so that's sort of like this 5% premium, except that I'm also paying fees to buy this here. So trying to think about like, well, why am I buying them on there, and I might not, and I don't think that I'll buy this one. It's somewhat close, right? Understanding that this 10% is again still a projection. I'd much rather be buy. If the 10% yield is what is what you get based on their last year's actuals. Um, I'd be much more inclined to buy this. But then the other difference is here is, we could be forced into a sale here where other co-owners get to vote on that, where that's just not going to happen over there. It's not, the default position on that site is a much longer or is a longer holding period, where that might be the intention of this co-owner. But as we've seen, if you've been in the Lofty Discord at all lately, there are just some unreasonable investors on the site that are willing to vote for things that make very little economic sense, if you do the math on stuff. And so, it's one of the reasons why I'm doing still a lot of experimenting on Lofty, putting, I think I'm in 27 different deals on there, but still just very much experimenting because I'm getting good returns, but I'm doing it almost entirely by buying discounted tokens. There's very few that I've paid $50 or more for. That I'm getting a great return on. There are a few. There are some, but the problem is with those ones, it's early. It's tough, to know, will that continue, or is my diluted appreciation over time and diluted yield over time gonna turn those into just ho hum deals in the long run? Uh, there's no way to really know, right? And it's both good and bad that there's a very flexible structure on Lofty. Like if if you're able to sway your co-owners into doing the things that you'd like to do and that are, that are good for you financially, then you can actually get some really good deals, like some of the ones that were buying the tokens at a discount, and then we get together and sell the property in the real world. I've got quite a few of those now going on, and some that have panned out already, and at really fantastic returns. Um, but at the same time, you can have ones where there's a lot of back and forth on changing managers, changing business models, right? There's ones that went from short-term rental to long-term, or long-term rental to short-term rental. That there's a bunch of months of no money, and having to pay for the furniture, and then it started to work, and then it didn't work. Like you have all those issues on here because you have different people in charge, that you don't have the same problem on some of the other sites where you have just that centralized decision making process. That's um and even though there is some voting on major issues on some of the other ones, and it depends. I mean, it depends what other site you're talking about. But mostly, I'm comparing, because I'm buying so many short-term rentals on Mogul. That's my thought, is comparing that to this deal. And this is not. They're typically have a higher revenue to price ratio, which means the deal itself is better. Um, and so where some of the benefit from this deal is coming from is from the strange, the mortgage structure. And so, I'm just never a big fan of financial engineering being the source of my returns, because they almost always come with an equal amount of additional risk or fragility in your return, right? And so, like, you can see a lot of these that have really high returns drop to zero super quick, and then drop to zero, yield, because it's just really high, because it's highly levered. It's not, and that's not necessarily what's happening here, because this isn't a ton of leverage for this size property. I think what's going on with this ridiculous yield is that they're just annualizing February. Sorry about that, just a little technical difficulty. I'm going to just wrap this up. I know I didn't actually make this a quick video. So the one thing that I wanted to point out is, this number is annualizing a fantastic February. One thing that could possibly be the case and could turn this into a great deal is maybe they are ramping up their numbers significantly better than what the projection is, right? Maybe that's co-owner is giving us a conservative projection at 195 in top line revenue, and actually is going to hit a much higher number. If that happens, this could turn into an amazing deal, even if we're paying a little premium on it. Um, I think that if that's what we're going to happen, though, that we'd have a little bit of discussion about potential upside over and above those projections, and I didn't see anything about that. Um, And so I think, that's one of the things, one of the reasons I like short-term rentals is there is the possibility to just really crush it with them. And, if you look at the first year of operations, a lot of times it doesn't do as well as the, third, fourth, or fifth year. If you accumulate a lot of great reviews, if you really get things down, you understand, your market and your timing, and what weekends you can really push prices, and all that sort of thing. So, I think there's some potential for this to be a fantastic deal. But it would be a speculative investment, right? And then you have that on top of all the other things that I mentioned, right? Like that it looks like it's there's a lot of little maintenance issues that just haven't been taken care of. That the main ones that I really get worried about is whenever you have leaking water that's not addressed quickly, it just leads to more damage. That, and then that it is a market that I've avoided, just because of hurricanes and insurance costs going up and whatnot there. So you can tell this is the first one that this is one of the best ones in a while, as far as the actual economics of the property itself, its ability to cover its own debt, and its and the fact that we have a year of operations, like, showing us that, right? So, um, I think if this were a model that I were pursuing very much on Lofty, that this would be a deal I'd be trying to buy. It's definitely one that if if March doesn't live up to February and we have a big dip in token prices, it's one that I'll try to pick up at 45 or 40, or I'll definitely come up with a number where I'm buying this one. And that's been one of the things, it's there are some that come on the platform and go straight up, but the majority go the other way, right? The majority uh, will have a dip before they'll have a spike, or they'll there's more often dips than there are spikes, right? And so if I'm on the fence about a property, picking them up when they have when discounts arrive is just to me the better strategy. Now, of course, if you're trying to deploy a lot of capital, sometimes that's not always possible, right? Some of the discounted tokens, a lot of times you're only getting 10 or 20 or 30 at a time. So you have to be committed to just picking them up whenever they can become available. Versus if I had 50K I want to drop today on a property, you can't do it all in that manner, right? You have to be doing it on a daily or weekly basis to to really deploy capital into the discounted ones. But okay, that's now I'm really done. That's all I had to say. So I like the property. I like the market. You know what I'm thinking. This is what I was trying to do is say, do you like this? What do you like about the property? What do you like about the market? If you could share your thoughts in the comments. I'm supposed to be asking you to comment, and I usually just ask you to come to our Discord and talk to us there. Really, wherever you want to talk to me about real estate, I'm happy to do it. Obviously, I just sit here and talk to my computer about real estate and, record it and because it's midnight and nobody's up to talk to me. So anyway, that's it for today. Until next time, gonna keep making mistakes so that